Okay, folks, welcome to Market Trends with David Russell. I'll go ahead and just kind of start the disclosure now. Great to meet everyone. I am VP of Market Intelligence at TradeStation. If anyone wants to shoot me a quick, all right, good. Looks like you hear me. All right. I do this every week on Thursdays, and it's always good to talk to you guys. I love showing some of the ways we can use TradeStation to analyze the market and understand the things that are going on out there. And just remember, everything I'm showing you is just for informational purposes only. Should not be considered recommendations. Okay. So if you go to tradestation.com, go up here on the top where it says Research Insights. And then I have this. These are talking points. Now, actually, I have a meeting today, so I'm not going to be able to do the as long. I got to leave right at 2:30 Eastern. But this blog post has a series of points in it, and it also has these links at the top where you can basically get the workspaces I'm working with. There's another ELD here which has a TradeStation indicator, and then if you need to, well, if you're watching this webinar, you've already registered. All right, so always kind of start with looking at the S&P 500. So we have this price chart down here. This one I took from TradingView. And I would just kind of show you. I use TradingView for some things. This is basically the chart I created, and what was really important to me. Well, a few things. First, the reason why I used TradingView for this one was actually just because their price channel shows the midline easily, and it made it just easier for me to draw this. So it's very interesting to me to see the S&P here, basically coming down. And, we were expecting more of a drop toward this level, 40.15. And after we last spoke, we pushed a little bit lower and we went under 4,100, and then it didn't want to stay there. So it's pretty interesting if you look this level from, December. I remember Mike Wilson saying we're going to go to 4,100 and never any higher than that. And now we've spent, what, a month? Well, not a month, 2 weeks above it. So we're above it. We're holding above it. We've tried to break under 4,100 and it hasn't lasted. And we tried again today, hasn't lasted. If you look on the weekly, all right, so that was the key thing. First of all, was the fact that 41.01, the high from last fourth quarter, and we stay above it. That's the first point. The second point is that we have this kind of channel coming down. And here what's interesting is this is how a bull flag breakout begins. It makes a higher low instead of, it's usually a price channel, right? You have a rally, then you have a price channel coming down, and it's a flag. And then instead of going down to the bottom of the channel, it holds somewhere near the middle of the channel. And then you have a higher low, and then the potential for a breakout. And what's interesting here is the higher low is occurring at the important 4,100 level. So like I said, there's a lot of things that are kind of, had made me think that this market was going to pause and pull back. I was right about the pause. But what's interesting here is that there is just no follow through to the downside here. And we've been hit by a lot of news this week that should be dragging us lower. CPI hot, PPI hot, retail sales hot, jobless claims still strong. And again, the market is not following through to the downside. So this tells us something. It's also interesting that we have the 21-day exponential moving average. It's kind of tracking to the upside. Different times, different moving averages seem to be, guiding us. And I think that's interesting. And it's also interesting to see that the historical volatility, this is, you can bring this on your TradeStation chart as well, but I want to show it here. This volatility in the trailing 21 sessions or 1 month is pretty much down to the low here. And other times we came off of it, and this time we're just basically mashing down toward and through it. So that's interesting. Another thing I want to point out, let me just do something here. Look at the other highs on the S&P. Peak, 2 candles, 3 candles down, 2 to 3 candles down. What we got here? We are for 2 weeks holding there. this looks qualitatively different, in my opinion. This price action is qualitatively different than these other peaks. So I wanted to just kind of point that out. So that's kind of my breakdown of the S&P, and we show a few other things. Last time we did this, I looked at the 10-day simple moving average. And, I have always found that it's my own tool, but I have found that the S&P, the 10-day simple, which is the yellow line on this chart, if you go to this is MT main workspace. Actually, I don't have it on this chart. I have it on some charts. The key thing is a 10-day simple moving average that has been rising for a prolonged amount of time now. And what's interesting is today it's set to have just like one little tick down. And if that happens, that would kind of refresh the overextendedness of this current run. So it's interesting to see this kind of tightness. When you have a rally and tightness, that shows that there's more buyers waiting very often. You don't get that follow through to the downside. That it's showing that there's money coming off the sideline. Now, what's interesting is if you look at a lot of the things that we had seen from people like what's his name over at Bank of America, Mickey Hartnett. He does this study, and he's basically, he surveys fund managers, and he's basically showing that these guys now have an intention of reaccumulating equities after basically draining money away from equities for the last year. These surveys that Bank of America Merrill Lynch or B of A Securities does shows that there's a desire to accumulate going forward. And now it's interesting also, let me just see this thing from the National Association of Active Investment Managers, which is this report. If you look at this, I can share this, but if you just Google, NAAIM exposure index is called. But anyway, this kind of, took out, it's interesting to see that, again, this kind of seems to confirm what Mickey Hartnett is saying. So this shows the amount of people wanting to hold equities. All these things are kind of just pointing to the fact that this is something of a different kind of environment. We made a lower kind of high, as last year began, then, proceeds to new lows. And this time it's like we're making higher, so all this kind of points in that direction of, there's money coming off the sidelines and continues to do so. Let me see anything else I missed. Now, as I look out, I want to point out that there are Fed minutes on the 22nd, which is Wednesday of next week. So just bear that in mind. That's a potentially kind of big event. The Fed minutes can often kind of just really weigh on sentiment and stuff. I'm not sure right now if they will, but I wanted to point out, I don't want to forget to mention that to you guys. All right, so let's look at some of the other points I have here. Remember, you want to go, is the MA test indicator available in the download section? Yes, MA test. There's also EMA test. So MA tools, this should work for you. This works, this radar screen. In fact, make sure you get the ELDs. If you go into the zip file, just so you actually know, let me make sure you guys know this. This is what it looks like. If you go into, there's IPO tool and MT indicators. If you load both of these in, when you load those in, and then you open the workspace, these should work. So you'll see MA test and EMA test. Now I want to point out one of the things that I often kind of emphasize. Let me just show you the VIX, because this is to me interesting. So we saw historical volatility collapsing, and we see the same sort of thing with the VIX and implied volatility. Now, one of the things that I've kind of looked at in my webinars, and this is to me kind of is a way to view the market overall, which is that you go through periods of when you have higher volatility, you have higher correlations. And then when the VIX goes down, stock picking and individual stocks start to make sense and to work. And we seem to be entering a period like that. So I think it's just kind of an interesting thing to see that we have some individual names that are doing well. And I'm going to mention this, but it's interesting to look at these. Last week, we talked about IPOs. We showed you how to use the IPO tool, which is included here. It's a very simple tool, but it basically allows you to find companies that have gone public in the last 1 to 2 years. Because I mean, last year was kind of dead for IPOs, but there were a lot of companies went public in 2021, and that got hammered, and now they're clawing their way back. And what's interesting is we had actually outlined that with FRSH last week. It was kind of interesting. We noticed, I mean, this is just an example, but the point is a lot of these relatively new companies have actually been jumping in the last week or two. Things like Palantir. This was an IPO, when was it? In late 2020, I think. But the key thing is that this is interesting to see money coming back to these names that have now been public for about, 500 candles, which is, under 500 candles is under 2 years, but that's how you scan for them. The point is, you see the VIX coming down, you see the stock picking in these individual names, and that is also telling us that we're now in an environment where looking for different kinds of names could be more, of a viable strategy than it was before, when everything got the baby thrown out with the bathwater. And now we have, an environment where people are coming back and playing individual names. Speaking of that, if you want to see some of the things I did recently on TradingView in particular, we did an idea today on Block, the former Square, which I wanted to kind of point out. Kind of interesting. If you look at SQ, I mean, it's a pretty interesting chart when you look at it. It has this golden cross, and if you actually look at this level, it held this level from back here. But look at this on a longer term. Basically, it's all the way. Look at where it is. It's basically where it was before COVID. So I mean, this is COVID. This is a crash, and then look at this rally. So it's interesting, because I think one of the other things that we just don't want to forget about is, and I quickly show this, but let's take a look at Bitcoin. I mean, this has been pretty interesting, and we had mentioned this. We did an article on Market Insights about 2 weeks ago about what was happening in crypto and the interesting kind of turn that was taking shape at the time. And it has been, pretty much trending higher. We had done this article back here at the end of January. It's pretty interesting how this thing flipped bullish, the Bitcoin, the crypto fear and greed index. So we had highlighted this, and now it has been advancing. So what's interesting is to see something like Bitcoin going higher, and then to consider something like Square as well, which has that, or Block as it's now called, has that crypto exposure. Then there's a bunch of these other names that are potentially, I mean, I've been watching like Coinbase as well. It's kind of interesting. A lot of, fear has kind of come out of it. So I wanted to just kind of mention those, because all these things are kind of coming together. It is sort of like risk on, people moving away from that big like fear trade, and it's moving back into these parts of the market now. A lot of these things are now kind of extended, so you just have to be, with everything, that is a question of risk reward being good at any point in time. Right now, you look at some of the cryptos and stuff, it's like, I'm not sure where I really see any like, real edge in it. Something like Bitcoin here. I mean, when you look at Bitcoin, from my perspective, a move back toward 30 is, something that a lot of people are potentially looking for. It's holding this level from right here, so kind of just interesting. But when you look at this in the big scheme of things, it's not clear that this kind of reflation or the kind of risk on again is finished. There's no real signal that it is. So I think that's interesting to kind of just bear in mind. But you can start to find these other opportunities that might pop up along the way, and that's why we put things up like on TradingView and stuff, because something like Square to me was kind of interesting today. It's also interesting to look at, Apple has had something of a bullish, like, breakout here of this bullish triangle. And I think what's interesting about Apple is, if you look at it on a weekly chart, let me make this a weekly. We've seen this pattern everywhere. It had an inside week. The S&P last week had an inside week. Everything is squeezing, and tightness again is not a bearish sign. Usually, more volatility is the bearish sign. A big unified, correlated unwind is what causes those volatility peaks, and we don't seem to have that. So, all right, let's go back over now to my run through very quick. I gotta zip through this. So what's interesting to me is, if we look at some of the things that are happening, that really kind of stood out, is that the oil situation is whatever you might see about CPI being hot or anything like that, the oil situation is getting more and more favorable. The oil inventories are going up. We have record US shale production, and usually the way something like shale production works is once this starts cranking, it's not going to just stop right away. So once the oil pendulum swings toward rising inventories, historically it increases more. So at this point, we could be in a situation where we actually start to see a ratcheting up of inventories. And everyone keeps talking about this Chinese recovery. I'll be honest. I mean, I started my career learning, economics in the third world, or, developing countries, whatever you want to call it, in Venezuela. That was where I started basically studying economics and markets, basically learning about the collapse of their situation in the 80s and 90s. And I look at China now, and like, I don't see how China ever goes back to where it was, when you consider the amount of debt they have, and you consider the fact that there are various people who are moving their jobs away from China in different ways. And to me, I think China is looking at something that looks similar to what Japan had. It seems difficult. I mean, one of the biggest things I've learned with investing is that when you have debt, that debt thing hanging on you, look back at Eastman Kodak, look back at the newspaper stocks like 15 years ago, and once you have that debt, it's really hard to pull you out, and they've got a real mess right now. So from my perspective, China is headed towards stagnation, and they're going to start exporting deflation, and their economy is never going to surge back. And that's going to be a positive for the United States for the foreseeable future, and it's going to, prevent commodity prices from spiking. So I think it's interesting to see the strength in things like retail sales, and we had weak housing starts today, but when you look at the home builder situation, their forward-looking sentiment indicator had its biggest gain in almost 10 years, a big gain in forward expectations on sales. So, to me, again, this is just a situation where, there's so much demand right now. And if you look at the American economy, the key words continue to be aggregate demand. Everywhere you look, the American economy is rebuilding itself from the inside out. So you guys may or may not remember when this was part of the old master class, but we talked about Encore Wire. Now, these are not stocks that are heavily traded, but we were talking about how this stock is basically reinventing a key industrial product. And they're just saying, we're going to have one giant factory in Texas, and we're going to sell wire. This is massive enterprise level stuff for commercial construction. And they don't have a supply chain. They have one factory next to a railroad, and they crank out wire cheap and fast. And this is the new model that is coming out of the American system. Now, if you look at the same thing with these auto suppliers like APTV, Borg Warner, Genuine Cast Parts, all these things are just showing that this demand scenario in the United States is incredibly strong. And then you look at what's happening with the home builders. They have had a complete beating on interest rates. And, the home builder in like ETF, for example, is, one of the top performers in the last 3 to 4 months. And it really, when you consider these housing starts today, this thing is barely down. So I think what we're really seeing here is the market is looking out, and it is seeing a situation that continues to get stronger and stronger. And it is because, like, as we have talked about for the last year, the ordinary economists are totally misreading the economic situation right now. And it is going to line up in a way that has less deflation, job growth, less inflation, job growth, income growth, business to business investment, and not a lot of business to consumer. And the traditional consumer stocks, look at Procter and Gamble, look at things like, Coca-Cola. These traditional stocks are just languishing. And part of the reason is because their traditional business models are kind of breaking down. And the traditional sort of thing you see of how the consumer business works, all these things are just not what they used to be. And I think it's interesting to look at this because the earnings in these companies have been propped up by raising prices, and they are not just pulling it together. The main thing I want to say about consumer staples, I find it so interesting because to me, there's so many interesting things about these companies, not particularly bullish. But what's interesting is look on a year-to-date basis, go to our key ETFs, look on a year-to-date basis. What are the only red numbers? Consumer staples, healthcare, and utilities. Safe havens are the only negative stocks on a year-to-date basis. And actually I added healthcare, just so you know, XLV. And so again, we just see that this is not what a bear market looks like. In fact, I would say that the only bear market I see right now is in the VIX. So I want to just, this is like the opposite of last year. Now it doesn't mean to be overly giddy, because at the same time, as I look at this, I mean, I still look at the situation of the calendar, with some degree of anxiety, because we basically have this, an eternity, 5 to 6 weeks until that Fed meeting. Jerome Powell. So we have on the 22nd, we have the Fed minutes. Jerome Powell's in Congress on the 7th. We have another CPI, another non-farm payrolls. So there's a lot of things that can go wrong, and a lot of opportunity for things to be bearish. However, it's just at this point, it's not exactly panning out. So it's a very strange environment when you really look at it. And the only way you can really explain it is that there's money coming off the sidelines, and there's people who are saying, you know what, in 3 to 6 months, the situation is going to be better. And if I'm long-term thinking, I'm just not going to be a seller now. And that seems to be the narrative. It's not hugely gratifying. Everyone wants to say inflation this and everything's bad and blah, blah, blah. But the market is looking further out. It's interesting, though, because they're at a point where the Fed is just not, they're saying, well, they can raise this or that. But the key thing is that it's going to end probably, June. Well, I think June is pretty much set to be the last hike. So, all right. I went through the economic news, and the same thing. The company news is very interesting. If you look at some of these companies, there's exactly what I had kind of highlighted last week. I said these smaller kind of growth companies and the IPOs. I mean, Roku and Twilio are older companies, but a lot of these other companies that were like your Cathie Wood companies, your IPOs, Roblox, Airbnb, Palantir, all of them had strong results. Now, another one I want to mention is DXCM. Now, healthcare has not been good. This company is a really fast growing diabetes company. And they had some interesting sort of news. I think this was the gap here where they had the government covered one of their treatments in a better way. These companies are based on reimbursement. So it's a lot of like reading the fine print of regulatory stuff in terms of how the Medicare works. But they've had good earnings, and now they have a new product coming. So this is their earnings report, and a new product coming out. This company, to me, DXCM, is just a one we want to bear in mind. They have this new product coming out, and they had this Golden Cross back here in November. This is just a name I think we want to keep on our list. It's some of the price action, and it's been pretty interesting. And sometimes when you have things like new products and stuff, people can, you can get some interesting momentum. Now, what's also interesting is, these Chinese names. Well, I think one of the most interesting things in the last month has been pretty much the meltdown in Chinese names, things like Alibaba and stuff like that. Now, I will say that, it is interesting to see the pullbacks in some of these. And one of the things I was thinking was, and the things that I've been wanting to kind of trade myself, I haven't been touching these lately, but is to kind of think what happens if these stocks start to bounce? Because a lot of these, like JD, Alibaba, I mean, these stocks have really pulled back hard, and they had some big moves earlier in the year. So, I mean, these stocks can trade very interestingly. PDD is another interesting one that has not pulled back nearly as much. So, for me, it's kind of interesting that the Chinese tech stocks can do well, even if China is limping along. I think it's interesting just to kind of put these back on our radar, because KWEB and these Chinese stocks, they've had some pretty significant pullbacks here. And I think it's interesting to have these on our list. These are some that I've been kind of watching, and I'm wondering if we start to get some energy, some activation in them. It's also interesting that we're going to have earnings. When do we have earnings on this one? Let me see. Baba. I feel like some of these have earnings soon. Sorry, Alibaba's on the 23rd, and I think JD. Some of these stocks are going to start to report earnings. You might want to just kind of look into these, because to me, these could be interesting to watch. They've had some very significant pullbacks. It's interesting to see this in the last month. I'm wondering if they do come back. Very quickly, my kind of big mover of the week is this company APP. It's AppLovin, which was another one of these high-flying growth stocks back in the COVID period. And this is just another interesting example of just how some of these names are jumping back to life. We had focused before on things like Align Technologies, which is kind of pulled back, but it's still kind of inching higher. And then another one was, those are the two we had mentioned, but Voya Tech saw this company, Voya Financial, which we had highlighted last time. We had talked about its low multiple and its high short interest, and it's been interesting. We had kind of highlighted this one as a kind of short squeeze candidate, and it is kind of pushing higher. So this is one from last week. Of any of these that I've mentioned so far today, the one that kind of, SQ is just kind of interesting to me here. Their earnings are next week. Wait a second. They report next week. I don't know why it says May 4th. Anyway, SQ with what's happening with some of the action we've seen in crypto and everything else, and some of these other growth names, kind of interesting to just kind of see a name like this. Yeah, Baba reports next week, and SQ reports on the 23rd. If you want to see, we had recently did a post about learning, different things with this article I did about price channels. We actually have here. I have it in my Swing workspace. You can see some of these different things with price channels, and I have found this to be pretty useful. And I haven't looked at it for today or anything, but I highlight some things. I was looking at, honestly, yesterday, I messed it up. I was trying to go long Freeport and I missed it. But look at how Freeport, FCX, coming off these kind of lows here. And there have been some interesting action in some of the other, like I've been watching it for like some of the things like US Steel. I was watching how this one came off the 60, the 20 bars, the 20-hour, price channels. It just held these really well. It's been interesting to see this kind of price action in the metal stocks, is where it seems to have been working most recently. And then we look at some of the other signals I kind of cover here. I want to just briefly show these to you guys. I spotted, FCX I want to mention because it's not on my blog post, but FCX basically had, see, this shows your daily, your weekly, and then your intraday. So I color them differently so I don't get confused. And then they're all linked together. And what I think I did was, if you actually look over here, see this radar screen. So if you're actually over on like your price grid and you're looking, or say you're on your MA tools and you're saying, oh, let's look for stuff that is, testing the 50-day moving average today, right? And then you click on them, and you click on, Caterpillar, and you jump over to Swing, boom, there's Caterpillar. It populates it because it has that same symbol linking. Now, it's set as a global, which is cool because it works between workspaces. So I have one screen here for this webinar, so I'm not doing it. But what I've been doing is I'll have two desktops and I'll put them on two different monitors. So I'll have this on one monitor and I'll click on it. And then my other screen right next to it will have this on it. And I can quickly zip through a radar screen or a scanner and look for things like this. But it's interesting here. You can see how Caterpillar has just kind of hugging that 50-day moving average. And the other one that I've been watching is Rio, which is an iron ore company. These industrial metal stocks I've pulled back and they're just so tight and they're holding the 50-day here. A bunch of these names, like, US Steel had good earnings. We've talked about the steel stocks. Like every time you guys listen to me, I'm just talking about steel. These guys also continue to hold these tight uptrends. And again, these cyclical names are really the areas that are outperforming. Yeah, I should talk more about Tesla. I mean, I've written about Tesla, and here it is, like basically taking out 200. And I'm trying to just think. I mean, it was basically a 50% retracement from this down on the weekly, and now it's basically consolidating there. And it looks like we actually now have a bullish outside week, which is pretty interesting. See, that's an outside week we now have. So I mean, my expectation was for Tesla to pause at 200, and it's just kind of like it's just squeezing here. So as you look at Tesla, though, I mean, the to me the upside in this is significant, because it's very difficult when you really think about where it is right now and where we are in the economic cycle. I mean, it's hard to make a case against Tesla. The demand for autos is strong, and if interest rates have peaked and eased down, then something like Tesla it's hard to argue against it. So I wanted to mention Freeport and Rio are holding the 50-day moving average. I did these other things yesterday, but DIS, interesting just to see it rally up, hold the 21 day exponential. All of these things were based on some of the scans I've showed you, based over here on the MT main. If you go to the if you go to this MA tools, this one, so Disney last night was here, and that's how it came up. You can see some of the other names here that are holding different levels. KLA 10 core, or now just KLA. It's a semiconductor equipment company, but it's pretty interesting to see it just kind of, again, just so tight, just nuzzling here at the bottom of this range, but then also at that high from last summer. Very interesting to me. And another name, like, you know, healthcare has been a weak spot overall, but Stryker, they make like knee replacements and stuff. You know, S&P company no one ever talks about, holding these old highs, strong earnings report. You know, this is one to me that could kind of just grind and sit, and then in a couple of weeks when nobody's watching, new 52-week high. And it's a sort of name that does that. Nobody's watching, and before you know it, breakout. So I wanted to kind of put these on people's radar. Remember, the markets close on Monday, and then after that, the big thing we got to be careful is Fed minutes at 2 p.m. on Wednesday afternoon. Those are the main items I wanted to cover. I wish I had more time, but I got to jump to this other meeting. It's great to talk to you guys. Remember, all this information is always going to be available on Market Insights. If you want to go to this blog, look at it. And also, I have the, you know, on TradingView. The last thing I wanted to point out really quickly was, it's interesting today to see the strength in small caps. This is a comparison. One of the things I like about TradingView is you can quickly compare one symbol to another. This compares the Russell to the NASDAQ as a ratio. Now, you can do this in TradeStation, but it takes a little more time. It's interesting just to see this, because this is kind of interesting to see as a long term. You can see this has been, the NASDAQ has outperformed for like the last 15 years, but it's kind of interesting to see the Russell's trying to fight its way back. It's interesting to me that the only one that's gone green today has been the Russell. So I want to just kind of point that out. I continue to expect more of a shift toward the smaller risk on kind of stuff, the cyclical things, the industrials, and that would argue in favor of the Russell. So just some of the things I want to talk about. I'll see you guys next week, and I hope you have a great day.